Major funding for these broadcasts has been provided by grants from Madison Realty Capital, New York Community Bank, M&T Bank, AmTrust Title, Ariel Property Advisors, Customers Bank, Capital One Bank, Meridian Capital Group. Additional funding has been provided by grants from AVR Realty Company, Bank of America Merrill Lynch, Briarwood Organization, CBRE, Citizens Bank, Colliers International NYC, Collins Building Services, CPEX Real Estate Services, Douglaston Development Levine Builders, Flushing Bank, Friedman LLP, Handler Real Estate Organization Handro Properties, Hodges Ward Elliott INC, Investors Bank, James D. Kuhn Real Estate Institute at Syracuse University, John Castamatidis Red Apple Group, Kilroy Architectural Windows, Matone Group, Mercantile Bank, Newmark Knight Frank, Optimum Window Manufacturing Corp., People's United Bank, Rockefeller Group, Rosewood Realty Group, SJP Properties, Stonehenge NYC, TD Bank, Terra CRG, the Merengoff Family Foundation, the Moynihan Organization, Moynihan Capital Partners, and these friends. It's called Long Island City. It's been a topic of discussion on my shows for many years, and it's truly seen its change. It's really evolved into a major community. So today, I've assembled this group of individuals to provide their insight on what's happening in all aspects of Long Island City and the neighboring communities. My guests today include my buddy over there, Alan Suna, who is the principal at Silvercup Studios and also principal at Silvercup Properties.
Close enough.
Okay. Jeremy Michel, who is the principal at TF Cornerstone. George Doerre, vice president, team leader at M&T Bank. And last but not least, the guy who recently, with his firm, sold one of the highest priced buildings in Long Island City per foot, Dan Parker, okay, who is a managing director at Hodges Ward Elliott. So how many years have you been in Long Island City, Mr. Suna?
That's like asking someone what their age is. So
I know your age, but that's
38 years.
38 years. Yeah. How many years have you been involved, TF Cornerstone been involved?
Right, I can't say I've been there for 38 years personally, but my father-in-law, his brothers, who were the founding principals of the company, have been involved in Long Island City, both on the waterfront and in Court Square for probably 3 decades plus by now.
Yeah.
Right. George, why does the bank like Long Island City?
Well, it's a couple things. First is transportation access. We regularly remark that we can get there faster from our offices than to a lot of other places in Manhattan. And obviously, top sponsors, and that's my second point, sponsorship. The number of families, the number of high-quality institutions that are investing there is huge. And that's what makes it easier to get behind the very large loans to push proceeds, because the market's become very much about, sort of maximizing the debt you can prudently put on the properties with an eye towards the takeout. And third, I think it's becoming a real bit of a community. I think that's one of the raps in Long Island cities. It doesn't have that texture of a Greenpoint or a downtown Brooklyn. And I think the institutional landlords are very smartly getting there and kind of curating the retail to have more of that bars, coffee shop, lifestyle, place to go home to feel.
Are we seeing more of the retail, Alan?
Yeah, and I mean, to the point that George just made, I mean, the other side of the Alganian family, the Rockrose folks, have made a very particular curated effort to bring in all kinds of very interesting retail, from bars to pizzas to restaurants to markets to drugstores and what have you. And I think they've done a marvelous job with it. I don't know what you'll be doing on some of the stuff you're doing down in the southern end of town.
Right. Tell me about the two developments, one that you're ready to do and one in the future.
Yeah, this December, we're expecting to break ground on a project we've been working on for over 4 years now. We were designated by HPD to build what's going to be now 2 towers, mixed use and mixed income residential towers. One tower will be about 800 units, the other about 400 units. It'll be 66, two-thirds will be affordable to a range of households from low, middle, moderate income.
To 165% of
Exactly, and the remaining third will be market rate housing. We'll have retail, a school, and parking all integrated into the
Now, how much retail and how large of a school?
We're going to have street level retail. It'll be, probably 10,000 square feet, plus or minus. It'll have, a vertical parking structure that was important to the community. And the school will be a separate pad that the SCA is going to build.
And talk to me about the second project that you just designated.
Yeah, so we were designated about a year and a half ago now. As you work your way up the waterfront, you get to a project that we completed a few years ago. It was a 7-building master plan we called East Coast. It's the Queens West master plan. And then just
AKA the Pepsi site.
The Pepsi site, exactly. And then just to the north of that, you get to Annabelle Basin, and just further north of that is this site that we were designated by the New York City EDC. And that's going to be 1.5 million square feet, multiple buildings, mixed use. Project is going to have 100,000 square feet of light industrial, 400,000 square feet of commercial. It'll have arts spaces, retail, a new school, and the rest will have residential.
And that, you have what, 3 years before?
Well, we're going through entitlements now, going through ULURP. We'll probably come out of that next year, and then it'll be a 3-year build.
You're also developing major projects in downtown Brooklyn. How do you compare Long Island City to downtown Brooklyn?
Well, I think they're similar in some respects, and they each have their own unique profile. I think we like them both. I think the waterfront in Long Island City is a unique asset, and they're not making more waterfront, and we are very bullish on the opportunity to create great public open spaces like we're doing, like we've done on the Queens West waterfront, which we're incorporating into what we're calling the Long Island City Innovation Center, which is this EDC deal that we were just talking about. And so that's something that can't be replicated, that our competitors couldn't do elsewhere. For us, that's one of the key points of Long Island City and why we're so attracted to that, as well as its proximity to Manhattan. Brooklyn has a different brand, different opportunity, but what we found there, and we're just recently in the process sort of securing the opportunity to develop 2 parcels at Pacific Park, which has a similar opportunity to sort of develop residential property in a park-like open-spaced area, which we were really drawn to.
Dan, let's talk about what you guys did in Long Island City about the sale, which people were a little surprised by the price per foot and the price per apartment.
Yeah, I mean, the price per apartment was in line with the market, and the building has a fresh tax abatement, so it creates a net operating income that pushes up the price per square foot. But what we were really excited about was the demographic studies that we made great access, because Douglas Elliman had done a great job leasing up. It's a 400-unit building. They had leased an average of 1 unit per day. And a lot of the discussion on the tour was, looking out over, the market and seeing a lot of apartments that have been delivered.
So what was the demographics?
One of the things that we highlighted was that close to 40% of the tenants who moved into that building were coming from outside of New York City. They came to the market with fresh eyes. Living in Queens in the Long Island City market is kind of a no-brainer to a newcomer, because they look at the offering of the building, the amenities, the views. They're looking at the world-famous skyline they've dreamed of their whole life.
So that's 40%. Where's the other 60?
So the tenants that are coming from Manhattan, we saw a big portion coming from the far west side. that tended to be somebody who was trading a commute that was west to east to Midtown, and now they could go to Long Island City for about the same commute, but $1,000 less a month in rent. So there was a value proposition that was very attractive. We also saw a lot of tenants leaving the area on the Upper East Side. That's a tenant that's probably paying close to $60 to $65 a square foot already, but for commodity, no view product. So we saw a lot of people leave that market and come to Long Island City. And then we found it also interesting how many people came from Long Island City proper. And at first we thought this may be a concession hunter. A lot of these lease-ups offer a free month, maybe 2 months in the winter. But that was not the case. We actually saw, we were able to compare what building they moved from and the concession and the rent that they were being offered at that time vis-a-vis what they accepted in the new building, and they were actually accepting a 10% premium.
You have the 7 buildings right now. What's the nature of the tendency, the demographics of people who are moving in today as opposed to when you built them?
Right. I think Long Island City has come into its own. I think a lot of the demographics of the building are driven by the unit mix, and we believe that as long-term multi-generational holders, okay, we want to own properties that have a large mix of large multi-bedroom units. We think that as the market matures, Long Island City is going to attract a lot of young and growing families. So we made an effort to oversize some of these units relative to some of our competitors, both in Manhattan, Brooklyn, and even in Queens.
Not the normal.
It's not the normal approach, and it's also, you know, everyone has their own strategy. I think for us, we're very long-term thinkers and believe that as the market matures, that's the product that's going to command the highest rents. And so that our next project on Hunters Point South, I described earlier, it's going to be almost 50% two-bedroom apartments.
Alan, you went in, besides the studios, you're in the residential buildings. You're finishing your second condominium.
Finished it.
It's finished, right.
Yep.
What's the nature of the type of people who bought over there on the demographics in the second as compared to the first?
Actually, the second, compared to the other one that we finished a few years ago, it didn't end up being terribly different. So I thought in the second one we would do something more like what Jeremy was describing, more larger units, family-sized units, thinking that Long Island City was coming into its own from a home ownership standpoint. As it turned out, you know, my partners, you know, pushed back a little bit on that. We still had some 3s and 2s. They took longer to sell than the studios and the 1s. The studios and 1s kind of flew off the shelf, as it did, you know, previously. A lot of those, not all of them, but you know, a good percentage of them were investor units, where people were buying, you know, I'd say 30%, to rent out to other people. But it's a mix. I mean, demographically and ethnically, we found in both of them that probably 60 to 70% of the buyers were Asian. A lot of them coming from Flushing, coming closer to Manhattan, next generation buying, so they wouldn't be that far from their parents because they're near the 7 train and all that other kind of stuff. But that was a big number. But then we have a mix of, you know, other people as well.
George, most of the developments that you've been doing in Long Island City have been rentals, correct?
Yes.
Have you done the for sale?
We're looking at some opportunities in the for sale space, and you know, a lot of what holds for rentals also holds for the condos. I mean, we in underwriting have these same sort of back and forth between do you go for the smaller units that you know you can move quickly versus we do see a positive premium to the larger units elsewhere in the market. I think there's going to continue to be some infill condo development. The thing we're finding is the boutique buildings are better suited for condo development because the condo buyer has other reasons for being there, whereas there's a bit of an amenities arms race in the larger buildings. When you're building hundreds of units at a time, you can afford to
Put the
amortize
30,000 square foot
Absolutely.
amenity package,
Right.
as opposed to the small building. Recently someone had shown me an unsold condo loan package, about 1.5 miles, a shuttle ride, and there were no amenities, small condos, but they were looking, it was a lower price point. It's the question, what kind of amenities did you put in your condo?
Oh, we put in
A health club? Small.
full gym, you call it a health club, call it whatever you like.
Right.
A kids room, a family room, a place, a gathering space, terraces that all the residents can use. Even though I would say 65% of the units each had some kind of outdoor space.
Cornell Tech is right over there. Roosevelt Island, is like the appendix, okay, of Long Island City. You're 2 minutes away over a very short ride. You have the F train. You also have the, ferry, and you have the tram. So you have all those things. And life science is very important in New York City. Let's talk about what's possibly planned and what's going to happen in your mind in Long Island City with regard to the life science and to the office, because we have Tishman Speyer, who built a rather large new building over there. WeWork is taking part of it, but in addition, when you have 700,000 square feet, you have 500,000 other square feet that you have to rent.
Well, in the case of Tishman Speyer, they started with, I'm going to call it 2 anchors. They had Bloomingdale's was their first one, which was about 300,000 square feet, and then you had WeWork came in for the other 300,000 square feet. I don't want to go into the specifics of their WeWork deal, but it was a little different than many of the other deals, where they were secured in a way that a lot of other landlords were not. So good for them. But getting back to your issue on Cornell Tech, when Cornell Tech was first pitched by the Bloomberg administration, one of the things that Congresswoman Maloney, people from EDC at the time, said the only place that these businesses can begin to grow is in Western Queens. So they will need space at Jeremy's, whatever, because the co-working space, or the co-locate space, they call it, that Far City had done on Roosevelt Island, maximum size there is 10,000 square feet. That's it. Anybody grows any bigger than that, they have to be elsewhere. And there's no other place for them to grow. But now you move a little further in terms of, a more interesting, and I think potentially super hot market that's going to come along, has to do with life sciences and the creation of new drugs, new therapies, and new data. And new data, oddly enough, is part of the life sciences world that integrates well with Cornell Tech. It's a whole nother world. It is not just wet labs and sticking things in mice. There's a lot of life science stuff that is, converging between these two worlds. And what's interesting about these worlds is that these young professionals, these scientists, kind of like hanging out with one another. They want to be in the same space. And so if you take the waterfront along Long Island City, going all the way down to Jeremy's world, all the way up to our world, I believe that's going to become a place that in some ways has maybe some similarities of sorts to the South Bank of London, where there's a lot of restaurants and bars and stuff, this and that, right alongside where there's offices and places in which to live. And these young scientists, they want to be in New York. They just haven't been those kinds of opportunities.
Right, which is what Dan was talking about, the demographics in general. And do you think you're going to have life science in your building?
I don't know whether we'll have life sciences in our building, but I think what attracted us to pursue a mixed-use development on the Long Island City waterfront, which is very pioneering at this point, is because we look across Long Island City, not only the waterfront, but just generally speaking, and see it as sort of the last blank canvas for commercial development, in whether that means life sciences, office, or otherwise. I mean, you can't replicate the access to transportation, both MTA, Long Island Railroad, Grand Central, access to points north, as well as sort of what's already there, which is thousands of residents who want to live and work in a neighborhood. It doesn't have to be viewed as a commuter market. And a lot of land area that could be entitled to sort of help stimulate commercial activity. And I think that there's a lot of
you bring up the word entitled.
Yes.
How hard is it to get land retitled for other purposes, Alan?
How hard? I'm holding up 4.
Four fingers?
4 years. generally speaking, he's faster because it's a city project.
Yeah.
But generally, by the time if a private developer went into the city and to try to get something changed, it'll take them about 4 years.
But that's if the city is supportive of the
Right.
idea. I mean, there are plenty of areas that aren't just you're not going to get the
Support.
industrial to residential or even to commercial use. Okay, so the right project, it could take 2 to 4 years. Otherwise, I mean, it just would fall flat.
That's why I said you take the site you mentioned before, that will not be rezoned. You can knock on the door all you want, it's not going to get rezoned. But it will be part of the new economy of Long Island City.
Yeah, and Long Island City in particular, is starved for certain community infrastructure investments, right? And that's been something that we're very focused on, providing a school at so a lot of our new projects, particularly the one I call Long Island City Innovation Center, which is going to have a school adjacent to us. Roads, sewers, improvements to the transportation system, all of that has to be contemplated when you're thinking about going in for a rezoning. What are you bringing to the equation, and what does the city sort of need? What does Long Island City in particular need?
I mean, I would agree with Jeremy as he talks about bigger units as the market matures. You have families, they need schools.
They need schools big time.
Yeah.
Schools, I think, is a necessity, and I think part of the entitlement in the projects with the city is the fact that, especially in downtown Brooklyn, where they're putting the new schools and other places, I think schools are a very important part of what they need in Long Island City. I think another situation, you can open up places on Vernon Avenue, but you need more larger retail probably for the population that you have.
I think we're under-retailed. We need to be more encouraging of development, especially commercial development. So I think that, we're trying to spur commercial development.
I mean, maybe I'm talking out of favor, but you have this Costco right on the water over there. If you redevelop that property to make it like what the Bloomingdale's, East River Plaza, where you build some surface parking and you build high, you could have more retail.
That may be down the road, but that's quite a bit further north of all the other things that are going on.
Right, but
Things
it
have
is
to
part of Long
organic-
Island City.
Yes,
There's
it
no
is.
question.
Well, Long Island City, if you look at a map, it's big, long and skinny. It goes for miles.
The more commercial, the more residential, the more retail will come in, and they'll play off each other. And I think that that's sort of what we're hoping to achieve, because, we want to demonstrate that this is a worthwhile endeavor to build commercial on the waterfront. We're happy to be the first ones. I think that it'll be successful. I think others will follow, and then I think retail will follow.
Look, people like water. Okay, there's no question. There's limitations on that. It's partially the way that Related is planning to do it on the Hudson Yards on the second development site over there, because of the water over there. One area that, you and Alan and I were on the phone talking about, and I brought it up on the show the week before, is the subject of this opportunity zones from the Tax Act. Okay? That's going to possibly help increase development in Long Island City in different areas, right, Alan?
Yeah, I mean, basically, Long Island City has got a number of opportunity zones, certainly along the waterfront, and then as you get further north of the bridge, for the most part. And while the regulations are not out yet on that, it is going to encourage investors to invest in those areas, both in real estate and businesses and things like that. And the purpose of it, that came out of the Treasury Department, is to encourage development, encourage new businesses, encourage job creation in areas that they think are underserved. And it's going to be a tremendous benefit to really move that entire needle in a good direction.
What's your thoughts about the industrial buildings being converted to office in Long Island City? Any thoughts?
It depends on, everything is building dependent. You're not going to convert one-story industrial spaces into office. You can.
Some of them have.
Yeah, some of them can. So it'll be like Santa Monica, okay? But not quite. I mean, a lot of the old industrial stock in Long Island City is old and tired and needs replacement. I think Long Island City is also going to be ripe for a commercial industrial rezoning, because one of the things that is really going to help this market be its own world is density. And density you're only going to get by having multiple floors and you're going to have uses, be it tech, be it office, be it life sciences, be whatever. Density is what's going to make this a fantastic place to live.
But we're also talking density that you were talking about, the clock tower, right?
Sure.
The density that's going to be over there.
Right, and that's obviously largely a residential project, but that's, I mean, at the end of the day, all these projects point back to jobs. That's all the consternation, whether it's the Garment Center in Manhattan or the industrial to residential conversion. And the truth is, the jobs that were there may not be exactly the jobs that will continue to be there if those buildings remain as light industrial or as commercial. But the question, and it can be very lucrative to own and finance, is how do we get as many bodies into those buildings working?
See, but
with
one
the
thing which
future.
hasn't been discussed at the show is the fact that if a company relocates from Manhattan to Long Island City and brings employees,
Yeah.
there's a REAP benefit, and the REAP benefit could reduce your rent significantly going into that. I mean, it's been approved, and people take advantage. As you know, one of my friends who moved his commissary from Manhattan to Long Island City, it was a substantial tax benefit for him to be there. So I think, in conclusion, Dan's going to be able to sell more property, okay? George is going to be able to finance, and the two of you are going to be able to develop additional properties and continue to grow. I'd like to thank Alan, Jeremy, George, and Dan, and I'll see you next week.